Welcome to another episode of Insurance Gone Wild. I'm your host, Dennis Settlemeyer, and my co-host is...
Stephanie Lencioni.
Stephanie Lencioni. There it is. All right. Well, we're going to go back and kind of do a little bit of an overview of something we've talked a little bit about before. Maybe not quite as in-depth, but we're going to talk a little bit about homeowners insurance today because I think there's a lot of what's the word I'm trying to think of? There's a lot of misinformation that's out there on homeowners insurance, what it covers, what it doesn't cover. There's a lot of misconceptions of what it covers, what it doesn't cover. And maybe the misconceptions are because years ago it did cover the things that it doesn't cover now.
Yeah, like hail damage.
Like hail damage,
that used to be a covered loss, but doesn't seem to be a covered loss anymore in the North Texas area.
Insurance companies certainly are having a harder time writing those checks, aren't they? It's like taking your best friend, you and your best friend go out to eat, and all of a sudden they've got T-Rex arms. They don't want to grab their part of the bill, like, you know. So that's kind of the way that's what it reminds me of. But I think the thing that I see in that there is a misunderstanding or a misconception of what insurance pays for or a number of things. Number one, and we talk about this a lot, cheap does not mean the same on premium. If you find a really cheap premium on a homeowner's policy right now, it's probably not going to pay for a lot of the things that you think it's going to pay for.
Correct. So, it may not be a comparable plan to the more expensive.
Correct. That is correct. It doesn't even have to be a lot more expensive. It's probably just not going to pay. Or maybe on paper it says that they will pay, that it covers these things. But the fact is
the reputation of the company.
The reputation of the company precedes it to go, yeah, we're not paying that.
Yeah.
Hail, roofs are one of those things. There is a company, let's call it Company X. There's a Company Y too, but a Company X who is very popular. They advertise a lot on TV. They have multiple lawsuits against them. They've had to appear before Congress. And why don't they pay claims? Why don't they pay claims? I mean, that's not a question. That's the question they get asked.
I have the answer because it's cheaper to pay the fines and the lawsuits.
That's correct.
That's why they're not paying the claim.
That's correct.
So they are literally in bad faith going into these contracts. And where I'm going to go off on a tangent here, where I get miffed at the whole system is, if they're going in front of Congress and they're doing these different things, why the hell have they not been shut down then? Like clearly we have established a pattern with this.
Correct.
It is going into a contract with bad faith intended. Yep. It wasn't an issue. It wasn't like, oh, we had this bad claims adjuster who or maybe like a bad batch of bad seeds at this one location that just the office got out of control and whatever. But we got it back. It does.
That happens.
And then we got it back under control. Systems got back into place. We started to have more quality checks.
Yeah, that's not what this company does.
But it's more and more companies out there that are following suit. And that is why we're having such a huge issue.
It's cheaper for them to pay fines.
It is cheaper. And then I'm telling you, what fries my fanny and chaps my ass, and it's not a big ass, but it's chapped, is they're going into it and nobody's doing anything about it.
Yeah.
Nobody is shutting them down. We would get shut down in a damn heartbeat.
Yeah, and it's probably
but we're not big enough to absorb.
It probably has to do with the lobby system and things like that that's out there.
Because again, another reason why people should love insurance.
That's right. And I think that people do have a legit concern about the insurance industry.
As they should.
I think it's legitimate.
We sell it. That's our livelihood. But I think we'd be fools to just blindly say, oh, well, insurance is fantastic.
And I think sometimes people may get that impression because of the way we talk.
Hell no.
There is the part that people don't understand, which we're trying to educate them on.
Yes.
Then there's the part that we understand and they understand, so we haven't talked that much about it. And I don't know that this is the episode we want to beat the dead horse on, but that is certainly something that happens, is that the insurance industry, specifically company X and a little bit of company Y, they just would rather pay the fines that get handed down to them. It's much, much cheaper.
That has become the business model.
Yeah, that is the business model. And you can look up company X and company Y online if you want to know who that is, but I'm not going to say their name.
We will not.
We will not.
Because we
not.
said before, we are small potatoes.
That's
and
right.
We'd be sued. But in this, same breath, as much as I like that boils my blood.
Oh, I get it too.
Like it's awful because you're, as a consumer, again, you're paying money. You want the value behind it, not just the piece of paper, all of the things. You're buying a promise, and then you're getting completely deceived and cheated and all these things. And as much as that happens, I'm going to say with every company to a degree, some are just more egregious than others. In the same breath, at the end of that breath, I'm still going to say, I'm going to take my chances though and pay my premium, because when that big loss happens, by God, like you're going to pay it. Yeah. As I at least need I can't self-insure my home. I'm not going to self-insure my life. I'm not going to. So, with life insurance and all those things, at the end of the day, health insurance, right? Like, again, we've talked about that on a very quick level where it's, you can, if an emergency happens, car accident, even heart attack, stroke, something like that, a hospital will treat you, an ER will treat you, get you just well enough to get you out the door so they can free up a bed for some other emergency, but they're not going to do the ongoing that you need. That's where the health insurance comes in. So again, it's I would call it a necessary evil.
Well, you're forced to have it. Right? Your homeowner, if you own a home, you're forced to have it.
Forced to have it.
Unless you've got your home paid off. If
Auto
you
insurance.
own a vehicle, you're forced to have it. So
unless you can self-insure by doing the blah, blah, blah.
which doesn't make financial sense.
No.
But you can do it legally, but it doesn't make any sense.
But for the general average Joe, you're forced to have it.
So, I would have a client or a prospect, I know, because there's some smart people out there go, well, if none of them are going to pay, then why don't I just get the cheapest?
Then you're guaranteed throwing that money away.
Yeah, you're guaranteed throwing it away. But
and you're still not protecting yourself. The whole point is...
There are some companies, there are still some good companies out there that try to find ways to pay. The way that they teach their adjusters, look for ways to pay the claim if we can at all. But they're bound by the contract too, right? So they can't pay outside the contract, or then...
You set a precedent.
You set a precedent, you get sued. Now everybody gets paid. So you got to watch that. You got to watch that. But there are some good companies out there. Those are the ones that we try to work with. None of them are perfect, like what you just alluded to.
Right.
But there are some that we do not like at all.
Right. I mean, it's like dating. If you know someone is a cheater and is just a cheater and a cheater and a cheater, I don't feel like I want to go have a drink with you. Like I'll try someone that may be a cheater, but it hasn't been confirmed or denied. You know what I mean? Look, I don't know. So we'll investigate together. But anyway, so
all right,
there are still good companies.
So why did I bring that up? Why did I bring up right off the bat if we're going to talk about things that are covered, things that are not covered? Company X. If I look on the majority of the policies that I review for the people that are with Company X, they will have their dwelling coverage, which is how much their company might pay to rebuild, or will pay up to rebuild a house. So in this case, a house, let's say it's $500,000. Okay. They'll pay up to $500,000. And here's a misconception, because I've had people do this. So, well, if this house burns, I'm not going to rebuild it. So why would I want the $500,000? Okay. Or why would I want to pay for that much? I'll just take the $500,000 and go somewhere else. I'm like, it don't work that way. You'll get a check for the actual cash value of the loss, and then they'll pay you the additional up to $500,000 to rebuild your home. They're not just going to write you a $500,000 check, unless it's maybe a total loss, like in a tornado or a major fire or something like that. Then they could come in and write policy limits, right? Okay. But just like a single one-off house fire. Yeah. So, but generally that's not the way that it works in every case. But I know an adjuster friend of mine that has worked tornadoes where he's went out there and he goes, there's no house to adjust.
Yeah.
The house, the foundation, everything is gone. I'm like, what did you do? He goes, I just looked at the policy and wrote a check for the entire thing. This is back when the adjusters literally wrote checks.
Right.
I mean, it may have
They
been.
might still do that in cat claims, though, where they go out there.
Claim.
Yeah, in cat claims, they're going out and their job is to get stuff going.
But I think the point is that lots of times people think that, well, if I have a loss, I'm not going to say it's a partial loss. It's 40% loss. They think, well, I'm going to get a check for the whole thing. No, you're only going to get checked based on the 40% of the loss. Then that's probably going to be depreciated. And they're like, well, I'll just tear it down. And I'm like, well, you got to tear it down. The city's not going to let you leave it there. So you're not going to have that money. You're going to have to keep. So there's some misconceptions of how things pay out. So let me back up a little bit. Yes, if it is a total complete loss, chances are you're probably going to get policy limits. If you rebuild it, they're probably going to give you an ACV check and write you a checks along the way as you get further and further to pay your contractors or whatever. But if it's a complete total loss, they may just write you a check for the whole thing and walk away.
Yeah, but so we're derailing completely from where we were really initially trying to go. But here's my question, though. If it's a total loss, that's my home, that's my property. Now, assuming I've got a mortgage that I've got to pay off, right? So forget about all of that part. But between myself and the insurance company, I won't say this house because, we won't put that bad juju, but like there's a house that's very close to me. I drive by it all the time when I go to my parents, drop the kids off, do the things. There's a house fire. Pretty significant. Doesn't look like it was a total loss, although they are gutting pretty much the inside of it. They're just not rebuilding the complete structure. But let's call that a total loss. At that point, though, if it is a total loss, it's not up to the insurance company whether or not to say, well, we are not going to give it to you if you don't rebuild.
It depends on what the contract says, right?
And I'll give you that. But but it's like a car, right? You get hail damage. Hey, we're going to pay you for the damage of the hail.
Yeah.
You don't have to repair it. You just can't come claim it again.
So here's what I'm thinking in the back of my head whenever I'm saying this, because I came back and I corrected myself. In the event that it is a complete and total loss, like a major fire destroys it, tornado comes through and wipes it out, that type of thing. Yeah, they're probably going to write you a check for policy limits and move on. But in a lot of cities, if you have a loss of 51% of the property of the building, they may make you tear it down and rebuild it. You have to tear it down
for integrity
because it's 51%.
Yeah.
Okay.
And then it's got it. Yeah.
So, and I get into those conversations with people. They're like, well, I'll just, whatever the thing is. I'm like, no, you may have to tear it all the way down because it may be an ordinance, a city ordinance at that point. You got to tear it all the way down.
Okay. That's different.
And sometimes fires get so hot, they actually destroys the foundational concrete portion. And then if the contractor can't come in there and scrape off that damaged portion, they may have to pull the entire slab out and redo it. Now, I don't know how often that happens with homes, but I know it can happen with some certain types of businesses where the fire just got so hot.
Oh, sure. If you've got a grease fire or something.
Yeah, it just got so hot.
Nuts,
and so
chemicals and blah, blah, blah.
Yeah, and that's what you kind of run into. So the thing is, number one, you want to make sure you want to make sure you're insured correctly so that you don't run into any issues. But on Company X, they would have maybe a dwelling coverage of $500,000. And that's just an example. Then you have other structures, which would be like your fence, detached shed, detached garage. And what I mean by detached is the garage is not connected to the house even by a roof line. It's completely detached. If it's connected with the roof line, then you consider it, it part of the dwelling. So you've got to look at that. So they'll have that, which all companies have that. They'll have personal property coverage. That's your stuff, your clothes, your furniture, your pots and pans.
Anything not fixed to the walls. Or ceilings.
Whatever it is. Those sort of items. Sometimes I think those numbers are really high, but I guess it's better to be high than the amount they cover. You know,
if you had to replace everything,
$250,000 on a $500,000 home. I don't think I have $250,000 worth of stuff that I'd want to replace, but I could. I don't know.
Between all the tools and then the bed and then the furniture and then
Maybe.
you've got clothing and then you've got the little thing here and the.
But if you don't have it itemized or pictures or something, how are you going to remember every little tool that you have? You know, I don't.
Well, no, at that
I've got
point,
so much stuff.
Well, but that's my point, though, is that you accumulate over the years, and then with things like tools or even kitchen things, you're like, oh, I think I have that from a couple years ago.
Yeah.
And then you go get it, and then you replace it once you need it again, right?
Correct.
But
okay, so let's go on down. That's normal. That's normal stuff that any company is going to have on their policy. Then they'll have loss of use. Sometimes it's called loss of use. It's also called. Oh, my mind just went blank. It's whenever there's a covered loss.
Additional living expense.
ALE, additional living expenses. When you can't live in a home because there's a covered loss, they will pay to put you in a motel, hotel, an apartment,
a different place,
temporary
house,
living,
temporary housing somehow.
Correct. It'll help cover the expenses over and above your normal monthly expenses that you've been having.
And you still have to pay your mortgage.
You still have to pay your mortgage, so you still got to pay your mortgage. But now you've got this other, and they'll help pay. They'll pay for that. Correct. And so you want to make sure that number is not some little number because you may be out of a house for a year or more.
Well, and sometimes. To that point, they actually limit the time frame. So they
Could be 12 months. Mm-hmm.
They give both a
dollar
amount and a time limit.
Correct.
And you think, oh, well, 12 months, like that's plenty of time. Well, it's not.
Not
it may
really.
not be. It may be, but it may not be. And then if you have to completely rebuild, there are a lot of decisions that go into that. And then there are a lot of testing and things that you have to do. Did the foundation get destroyed?
Yes.
Do you have to redo that? Do you have to?
The plumbing, did it get
what
hot enough to melt
contractor
plumbing?
are you going to use? And because that's always a fun thing to do. And then the plumbing and then. So it is. And then the weather permitting, depending on when everything gets started and what season it can be a mess.
Yeah,
so it can be longer than 12 months.
I never want to go through it. I've got a friend that we met. Actually, we met her down at the networking group we used to go to down in Arlington.
Yeah.
She was a masseuse. She is a masseuse. She's down there. I don't know if you remember her or not. I can show you her stuff here.
Yeah.
Her house
Sarah.
burnt down.
No.
Her house burnt down, and she has been dealing with it for a year plus.
Oh, man. I'm so sorry.
It has been bad. Now I don't know if it burnt down or it got something happened. Bad happened to it.
Yeah.
And it has been a fight, and it has been some other things. She actually posted some questions on Facebook, and I helped give her some answers on some stuff.
I'm so sorry to hear that.
Anyway, so that happens. Then you have loss of use. You have the liability if somebody gets hurt, slips and falls and gets hurt on your property. These are all normal things that are on almost every policy that's out there.
They're the
Whether
staple
you're with
items.
company X, company Y, company A, B, C, D, E, F, G, it doesn't matter. These are the things that are on there. Now, what happens a lot is that people will say, okay, well, you've given me a quote. I've taken those 5 or 6 things and I've put them up against the other one. You're $500 higher. You're $1,000 higher. And I'm like, yeah, but
go to page 2. Go to page 2.
In the example of company X, go to page 2 because it'll have a whole page it'll have these coverages. Not taken, not taken, not taken, not taken, not taken, not taken. I'm like, you have no water backup coverage because it says not taken. You have no ordinance or law coverage, not taken. You have this, not taken. These are important coverages. Ordinance of law, it says if you have a loss and say you have an electrical fire and they come in and fix it, and the ordinance says, hey, anytime you do that kind of work, you got to make sure that you hit your breaker box has to be brought up to code, whatever the code is at that time. Well, wait a minute. The breaker box didn't necessarily get damaged, but city code says, no, you got to bring it up. Well, if you don't have ordinance or law coverage, ordinance of law coverage, that's going to come out of your pocket.
Right.
And
that's coming out of your dwelling coverage.
Yeah. People don't realize that. And there's usually a sublimit on that of,
it's usually 10%.
10%
of your dwelling.
Yeah.
But again, at that point, not a huge deal. Yeah. Like if it's a partial loss, it shouldn't be a terribly. But do you want $25,000 coming out of your money that you could use to rebuild your home? So now I get crappy
because a breaker
carpet.
panel could be $5,000-$10,000.
Yeah. And how many, I mean, there's so many. First of all, codes are constantly changing. So you don't even need to have a house that was like one of our first homes.
You could have a brand new one that was built a month ago and the codes have changed. And
correct.
Tomorrow you got to do something different.
It's not just that you have a house built in the 60s or 70s or whatever. So yeah, I mean, it can.
That is absolutely correct. So we've got those kind of coverages. And so we look at those things for people. Look, you have no water damage coverage, not just water backup from like sewer or backup of a washer or something along those lines.
Right.
Or toilet backs up and causes a bunch of problems, which I had an example of that. My very first customer left, came back, her toilet had backed up. When she left, she flushed it and just walked out like a lot of people do. You just take it for granted that it's going to go down.
I trust it.
Yeah.
I don't usually watch the process.
A week or two later, 2 inches of water was coming out, going down her steps at the front of her house. Well, if you don't have the right coverage, guess what? They ain't covered.
That's a bad deal.
That ain't covered. So you got to make sure you have the right coverage. But then you get into the fine print. Okay. Those are things that are all on there. It may say, here's a little bit more of the fine print. Jewelry. If you have a fire or something if you have a fire or something big like that, major like that, jewelry that you have could be heirloom. It could be your wedding ring. It could be anything, inherited stuff. That's considered part of your personal property. If it's a fire or that type of event. However, if it's stolen, there is a sub limit. And in Texas, that's generally $1,500. Not per item, per total.
Yeah.
So we talked because you don't know you don't know who's got that. You have to ask people what kind of jewelry. Do you have any jewelry? If so, what do you think it's valued at? Because you've only got $1,500. Somebody breaks in and steals it. Oh, well, my wife's ring was $5,000 or $10,000 or $100,000. I've seen those. I'm like, okay, you have no coverage for that if it's stolen. Basically, you have $1,500, but
okay, but I'm going to say this also though. So, because you mentioned if it was a fire, then it would be included in personal property. But if you do have, I mean, it's not hard to get $40,000-$50,000 worth of jewelry over the years that you can accumulate in different things. And, mama's got anniversaries and stuff. You know what I'm saying? But, so do you want $50,000 coming out of your personal property stuff? Again, yes, it would be covered, but really not really.
Yeah.
Because the personal property is really for the stuff that you would move into your home. And you know what I mean? Like, yeah. So it's taking you're taking a hit.
Yes, it's a big, and some people are okay with that. Like, I'm not worried about it. That's fine. But we don't let them know. Right. So one of the things, talking about stuff that's covered, not covered, one of the things or coverages we will suggest if they have a lot. A lot depends on who you're talking to, right? Some people, 10,000's a lot. Some people, 250,000's a lot. Right. You got to who you're talking to. If they have a lot in their mind, we'll talk to them about a policy through a company like Jewelers Mutual. Because Jewelers Mutual will cover the theft. It'll cover the physical damage. If you lose a diamond, it'll cover that. If you lose the jewelry, it's called mysterious disappearance. That's the term. If you lose the jewelry, the jewel or piece of jewelry, just the whole item. It'll cover that. So you could be at Disneyland in Florida, lose your ring on a ride, not be able to find it. It'll cover it. Right. And your homeowners will not do that. Will not cover mysterious disappearance. The other thing about having a Jewelers Mutual type policy is if you do make a claim, it doesn't show up on your homeowner's report. That's huge. That is huge. Right? Because homeowners companies don't like claims. And if you ever try to switch, you got to wait 3 years before you can switch because you've got this jewelry claim on there. Right. Because they're going to be like, yeah, we don't want it. You got to claim. Well, wait a minute. It was a jewelry claim. Yeah, we don't want it.
Yeah.
We don't want any of it. It's just their rules that they've made up. Right, wrong, indifferent. It's the golden rule, right? He who has the gold makes all the rules.
Right.
And that's the way it works. So we've got that. In Texas and in other states, the other big thing is, what do you think? What do we have in Texas? What do people usually have a lot of? Not everybody,
beer.
But, well, there's beer, alcohol.
Yeah.
No.
Guns. Oh, guns.
Firearms.
Yeah. I was like, wait for it.
Firearms.
Yes.
So firearms the same way. We asked the question, what's the value of the firearms?
Now, let me ask you this. Is it per item? Because sometimes it's not necessarily that each item is super expensive. It's just, hey, I need $10,000-$15,000 to cover my stash. to cover my...
No, well, that depends on the company.
Tools.
But generally, you give you $2,500 bucket.
Yep.
Because in Texas, we like our guns more than we like our jewelry.
For sure.
So it's $2,500 versus $15.
It's a different kind of jewelry. You're still wearing it.
And so we have to ask those questions. I have a guy who's a renter's. We do renter's insurance for him. He's got a couple of motorcycles, a couple of cars. And I was like, okay, dude, tell me about your guns. He goes, oh, I got some guns. I'm like, well, tell me about them. He's renting an apartment. Okay? He goes, oh, I probably have $20,000-$25,000 worth of guns. Okay, do you worry about those getting stolen? Every day. Because I live in an apartment. I'm like, well, guess what? I can fix that for you. So we got him something to cover his guns. Now, at the time, the company that I wrote him through, what we did on that is that company, since it was a renter's policy, I was able to say, okay, you need $30,000 for your stuff or whatever.
Yeah.
And then they cover 100% of firearms in their personal property.
Wow.
Even for theft. So I'm like, we'll just add another 25. Now you're at, say, $55,000 for your personal property. That covers your guns too. I didn't have to write him a separate policy.
That's cool.
Yeah, it's the only company I know that does it that way. Texas only.
Wow.
It's a Texas company.
Ah, that would be why.
Yeah.
Yeah, they
that's
understand.
Why. Yeah, it's a farm mutual.
Now, do you
which
have
makes
to,
a difference too.
Yeah. Do you
You don't have to present.
You don't have to show anything on that.
No, but it's to their benefit because if they can't prove they own it, they may not get paid. You can't just say, I owned a bazooka and it was worth $10,000. Pay me. You know,
okay.
So you have to have
do
something.
have to prove something.
Yeah, but not at the time of writing it. That's what I meant. But maybe at the time of the loss.
Okay, but because because some people they've got like heirlooms too with guns, right? Like, hey, this was my grandfather's yada yada yada.
Yeah.
Well, we've got I think his grandfather's shotgun or something. Mm-hmm. I don't know that it would be worth anything on a dollar amount. It obviously has sentimental stuff, but
you can't insure.
But I don't know. Yeah, no, you can't do that.
And I mean that good and bad.
Yeah,
I don't mean that a super negative.
Yeah, no.
It's just there's no way. I wish I could insure some sentimental stuff, but you can't do that.
Right. But again, I don't know if it has actual dollar value. But there are some that are dollar value, like they are valued highly. Financially,
there's
like
a gun store at the end of Harwood and
I just
Davis
saw that.
or whatever. We took some. My wife and daughter took some of my stuff down there and had it redone. Oh. And one of them was my dad's old .22 rifle. Yeah. And the stock was broken on it. It's not a weird looking. It looks like a .22 rifle, but it's a little bit. Every stock is designed for the rifle mechanism, and they had to actually go on eBay and try to bid and win. It took them like a month or two to get it. And then to put the new stock on it was a lot more than if they just could have went to a website and ordered a stock, you know. Right. So it was worth more. The stock cost more than the gun's worth, but you can't insure the sentimental value. Right. Right. So anyway, it looks nice now. So yeah, if firearms is another one. If you have a lot, we can write a separate policy for that if that's something that you're concerned about. And then sometimes you get the good old boy, somebody tries to steal my stuff, I'll shoot them.
Like,
well, no, usually they steal them when you're not there.
Yeah.
That's why it's called theft.
Right. And not murder.
Yeah. Or robbery. Robbery would be more your confrontation.
Yeah.
But theft is you ain't there.
But either way, robbery, theft, it all is the same bucket. But again, so I'm going to ask with those separate, because we haven't looked into that. I don't like the separate firearms or whatever, but is it just saying, hey, we have all of these firearms. We need a bucket policy, like a limits of 25,000, not per.
But they're going to want a list. In that case,
no, I'm fine
the
with
separate
that.
policy is going to want a list of the guns and the serial numbers and things like that.
Okay.
They're going to want that and what valued, and you may have to go get them valued by a gun dealer to say, whatever it might be. Because, I have a couple of pistols. I've got a few firearms. I don't have a lot. Even having grown up in the Ozarks around guns, I live down here. I don't need a lot, right? If I lived at home, I'd probably have freaking safe full of them back in Missouri. But down here, I just don't need that many. So, if that stuff got stolen, I don't know that it adds up to more than $2,500 more than I have, because they're not anything that's like very overly expensive. No, I mean,
to just buy a pistol to replace, you're looking at for a decent one, $500-$600.
Yeah, my pistol
really closer to $800 to $1,000.
My pistol was $600-$700, and it's a nice one.
Yeah.
Then I have another little pistol that costs like $200. Then I've got my dad's old .22 with the sentimental value. I've got I'm telling you what all I have, but you don't know where I live.
Yeah.
But I've got some other stuff.
See him.
But I've got some other stuff that there's not enough there for anybody to. I don't have enough to worry about. It pissed me off, Oh,
I'd be way pissed.
Yeah. But plus, if they walk in our house, they're probably limping out
with all the dogs.
And
and your daughter.
Well, there's that too. But but with all the dogs, we don't worry about that. They'll take care of people. They stranger walks in. But any case, it's so you have that, and those are some things that we talk to people about. Is what do you have? Oh, also, if we think we're talking to the right kind of person, we'll ask him about art. What kind of art do you have? Mm-hmm. Because some people have art. Yep. Same thing.
Rugs are a big one.
China. Dishes, that kind of stuff. So, for us, we try to get a feel for who are we talking to. Yeah. Do we get it right every time? No, because people don't always tell their stuff, because they don't know that it's important. And just because somebody lives in a $300,000 home doesn't mean that they don't have stuff that you'd find in a $3 million home. Right. But those are some things that people need to think about when they're talking to their insurance agent and say, hey, I have this. And it's valued at this, or I have this many of this that are probably worth X. How does that work?
Yeah, and I think as we're having this conversation, because I also don't feel like it should be up to us to guess and to try to pinpoint or see if that client fits into that box. I think it just needs to be a standardized series of questions and say, okay, great, we've got this information. By the way, do you have any valuable jewelry you care about, expensive area rugs, china, firearms?
That's what we try to teach our folks. Yeah, is, hey, just ask the questions.
A standard. It's just part of the. Do you have a pool? Like it's just another question on the list. Yeah. So, because you could be surprised. Oh. Like the renter. I mean, and not that renters can't have nice things and expensive things, but you just don't know. Yeah. So. Yeah. So with that renter, going back to that renter, we got lucky. We're writing it through the right company. It was real easy. So I think I've talked about this in the past. We had a client, but they had their sinks were starting to drain really slow. Okay. Really, really slow. Not to the point that it was a true backup, but just really, really slow. And they needed a plumber came out and said, hey, you got a tree root or something in there. They ran a camera down there. I don't remember what the problem was. Pipe had collapsed, whatever. We need to dig through the foundation right here in your living room and fix it, and then come back out and we'll fix it back. And the plumbers are always real good about this. They know the answer, but they put it on the insurance company. They're like, you have insurance for this. It's called foundation coverage. Not everybody. I mean, it's more common now.
Yeah. Well, Company X probably doesn't have foundation coverage because they exclude everything practically. So you have foundation coverage. And I'm like, and so they said, so we made a claim, which I didn't know they'd made a claim, but they made a claim. And the adjuster said, no coverage.
Why?
Because foundation coverage is what we call a secondary coverage. There was no damage to the dwelling at that point. There was no, you have to have water damage first.
Wow.
You have to, if the flooring, if they'd have woke up and there was water in the floor, or if there had been, and it has to be above the deductible. You know, if they woke up and there was damage to the flooring, to cabinets, to drywall, whatever it may, furniture, whatever it may be, and they had to go in there and fix it, then there's coverage.
Yeah. And, you know, and that's something
for
that
foundation.
And that's, but it's, that's the thing that kind of makes insurance a racket too. And I get it that there has to be the loss and they're not helping, but they're not helping to pay for the preventative. Like there's the issue to the place that you're insuring and you're not even, there's no help.
That's homeowners' responsibility for maintenance.
And I totally get that. But even if it's over the deductible, but it hasn't caused this major loss yet. So what's actually happening is insurance companies, the way the policies are written, are saying, hey, next time don't do anything about it. And then we'll pay the $100,000 claim.
Yes.
Opposed to the $4,000 claim.
Correct.
And you pay your $1,000 deductible, but you now don't have to worry about all of the drying out. You don't have to worry about getting new furniture. You don't have to worry about getting new floors. You don't have to worry about this. You don't have to deal with contractors. It's just, I mean, it's.
So going with that.
Have I mentioned how much I love insurance?
The client told the adjuster, said, well, then I'll just withdraw the claim and wait for the damage to happen.
Well, now you can't do that.
Well, the adjuster's like, well, you can't do that now.
You can't do that. You've known about it. Now you have to mitigate. You have a responsibility as a homeowner to mitigate the loss, the potential for future loss once you know that something has happened. That's correct. So
that is correct. So
you can't.
Yeah. So that's little things like that people don't understand. There's a misconception, or maybe the policies may have paid for that stuff in the past. You know, people have had policies for 30, 40 years. Things have changed over the years, but they're not going to pay for that kind of stuff. Another one is like hidden water damage. Some companies will say, well, for instance, let's say we've got a desk in here that you guys can't see, but let's say that desk is what do they call it? Let's just say a cabinet in the bathroom. And there's a water leak under that cabinet. Well, you never get into the cabinet. You don't know there's a water leak underneath there. It's hidden to you.
Right.
Right. And then one day, or you open it up, you only grab the stuff in front, you never look in the back. And one day you're like, man, this smells moldy here. And then you see water dribbling out. Well, now that's hidden water damage. And some companies will say, no, that was hidden. We're not paying for any of it. You should have noticed it. And
should have noticed the hidden.
And
like,
then,
I'm like, can you listen to the words that you're saying out of your mouth there for a second?
Well, they have hidden water damage coverage on their policies. And then others will say, no, we'll pay for it as a water damage claim as long as you make the claim, if you need to make a claim, as soon as you see the damage. You can't wait 6 months and go, oh, I'll get to it later. I'll wait till it gets worse. Because they can tell. An adjuster can tell. Heck, anybody can tell. You come in and you've got half your wall has got water damage to it, and you're like, oh, I just saw it yesterday. I don't think so. I don't think so. So there's a bunch of little things like that happen with homeowners policies that people they don't get it. Here's a story for you. As you know, I have some groups that I'm part of, and another agent posted on there says, "Hey, I'm looking for a homeowner's policy that does not have liability."
I'm not even sure why you would be looking for that, considering it is the smallest.
Yeah. So, well, I'm going to tell you why. He has a client that he's had for a long time that is a doctor. And this doctor thinks he's smart. He thinks that if he has no liability,
nobody will sue him. Jesus.
That's what all the other agents said. I said, walk away. Because if he's going to be like that on the front end, can you imagine what he's going to be like during a claim? He thinks he knows everything. And I almost ask, is he an anesthesiologist? Because the ones that I run into think they're God, because they kind of are God, really. They keep you alive. But the ones that I've run in are the ones that are the most difficult personalities. Let's put it that way.
Challenging.
Yes.
Challenging.
And, but so if any anesthesiologists are listening, bring it on. So you have
Challenge accepted.
You haven't met me, but, anyway, no, yeah, the doctor thinks if he doesn't have liability, he won't get sued. So one of the agents said, I guess he doesn't carry malpractice then.
Yeah, and I'm wondering, what are you doing to where you're so concerned about getting sued at your home?
Yeah.
Do you know, like, that's not your malpractice. They're not going to sue your homeowner's insurance for liability based on your professional work. Mm-hmm. So what in the world is happening?
I don't know, but we run into stuff like that. And I'm thinking it's $100 a year. I mean, if you have $1 million, it's $100 a year at the most, probably. And you're a doctor, you can't afford $100 and let somebody else deal with a lawsuit? That's crazy.
But
get an umbrella.
Yeah, but that's where it's not about, kind of to your point of what you were saying with the mindset, it's not about the value of it. It's about the stubbornness of I'm not going to do this because I'm so smart. Type of thing.
I don't know what the agent's going to do, but there was a bunch. There was probably over 100 comments, and the vast majority of them were walk away.
Yeah.
It's not worth it, which we would probably do the same thing if somebody said they didn't want liability.
Probably.
Yeah, we'd probably do the same thing.
I mean, again, why? Mm-hmm. If you maybe had a claim in the past or what, I don't know if that's actually what's driving it up. Because some people do have claims and it's a problem.
Yeah.
I don't know, but
it was weird.
I can't.
It was
but
weird.
If the answer to the question, oh, why are you looking to get that removed is, wow, because then nobody can sue me. Okay.
Because they can't take your home, right? If they win.
I feel like
they can't take your home, but they can say, you're going to have to pay us based on your income. You know? So anyway, crazy stuff that we run into. All right. Yeah. So here's another one. And then
we're almost on time.
Then we got to get off. But the other one is computers at home. Mm-hmm. All right. So here's how that works. You have a computer at home, computers. It's usually part of your personal property, but there's going to be a sublimit of maybe $1,500, $2,000. There's going to be a sublimit in there. Some are $500, some are $2,500, somewhere in there. However, if that computer is used for business use, for income producing use, generally no coverage.
Interesting.
Yeah.
So if you're just a gamer, you've got this sweet setup and you're multiple screens and and you've just got this like $10,000-$15,000 deal, and then that would be covered. But up to the sublimit. Mm-hmm. Okay. And then very quickly, I do want you to touch on off premises.
Off-premises property.
So we have, let's say it's a laptop, let's say it's a tablet, let's say it's a whatever, right? Mm-hmm. How does that, and it's in my car.
Mm-hmm. It's stolen.
It's stolen from my car.
So usually you have 10% of whatever your personal property coverage is.
That extends
to off-premises, usually anywhere in the world.
Okay. Does that include storage unit?
Yes.
Okay.
That does include storage units.
Okay.
Because we've had to deal with that a lot.
Okay.
So you got a $100,000 personal property and you got $10,000 stuff in storage. Usually usually covered on it. And sometimes people I got 50,000. Okay, then we need to write you a policy or find a policy. Usually I'm like, the easiest way is to get the storage units policy. It's cheaper, it's quicker, it's easier.
It's what they do.
Yeah,
like it's just specific.
They're specifically designed for that. If I go out and get it, it's going to be 4 or 5 times more expensive. But if you want me to do it, it's not like I'm making a ton of money off of it.
Well, and they're not that expensive anyway.
They're not that expensive, but just get it from the storage unit. If you can't get enough, then maybe we look at something different. Right. But that's usually what I tell people. Look, they'll just add it into your storage bill. It's simple.
Right.
That way you don't have to worry about it. So, yes, that is definitely something that is out there that could be in addition to your current policy. And I will say, because we're running out of time.
That would be 2 claims though, right? So let's say your car got stolen or damage in a fire or whatever the case was, but your car is gone and all of the stuff in the car is gone. That's an auto claim. And then if you're going to make that personal property claim,
correct,
that then goes against your homeowners.
Correct. That's
or
a good
renters.
point. If you have somebody breaks to your car and steals your laptop, your auto insurance is not going to pay for it unless you have. There's some auto policies out there that let you add on a little bit of personal property coverage, not much, but a little bit for little things like that.
Yeah.
But in order to make a homeowner's claim, it's got to be more than your theft deductible,
right?
Which right now is usually 1% or less, but sometimes more. If it's renters, we'll usually just have a flat deductible. It might be enough to make a claim. It might not. It depends what it was that was stolen. And if you're a business and you've got equipment that you're hauling back and forth, your commercial auto isn't going to cover it. We have to read your commercial policy to see how much is covered off site of your business personal property. But if it isn't enough or it doesn't qualify, whatever you're hauling, then we have to get an inland marine policy.
I'm going to pause you there. That sounds like another episode.
It is.
Okay.
It is.
So just focused on the residential, personal, home and auto portion.
Yeah. So
because we can go nuts on that.
A car break-in is generally not going to pay for personal property.
Right. Okay.
It might pay for the radio getting ripped out.
Sure, that's part of the.
You might have sound equipment coverage, but it's probably going to be a sublimit. Okay. So it's a whole other episode too. Okay. Auto insurance is, which a little bit about that, having been an adjuster on auto insurance. I don't know if you ever dealt with much of the physical damage stuff, or was it mostly liability?
Well, no. So I would do the physical damage part without. Once it was a total loss, we would send it over to our total loss guy who would do the valuation, but then I would still present the offer and negotiate with the.
All right.
But we were all liability. Yeah.
But it's a whole different subject. Auto is, and for everybody listening, just know that the things that I talked about today are high level. There's a lot more in a homeowner's policy because you can't look at your numbers on the first page and the quote that was sent to you from an agent and go, I'm going with this one because it's cheaper. It looks like they're about the same.
Right.
It is not always sometimes it is. Sometimes it's about the same coverages in the fine print, but sometimes it is. Company X, I guarantee you it is not the same as what's being presented to you from somebody else.
Right.
So even if it was, their claims is horrible. Their claims will be horrible. Yeah. Historically have been. Yeah. And so anyway, that is it for today. I did most of the talking today.
You did.
Wow. That hasn't happened for a while. I did most of the talking. All right. Well,
message received on that comment, sir. Jesus.
So anyway, thank you for joining us. Insurance Gone Wild. Send us an email, comment, call us, email, contact at igwpodcast.com. Give us a call, 817-753-0093. We would love to hear from you. If there's a certain subject or question that you have, feel free to ask. And we've seen some comments on some of our videos, and I have replied to them. People
there's one clip out there. I'm like, my God, can this girl be a little more swollen? And we'll use the word swollen, but man, them cheeks. Anyway, doesn't matter.
That is a whole nother podcast.
It's a whole nother podcast. I don't know, but
all right. Well, thank you all for joining us. We'll talk to you again.
Thanks.